Good morning. I would like to greet you all here and welcome you to the National Bank of Serbia, and thank you for coming to the presentation of the August inflation report. We will first give a short speech presenting overall macroeconomic developments and key macroeconomic indicators available to the National Bank of Serbia. After that, you will have an opportunity to ask questions regarding the inflation report. So let us begin. Ladies and gentlemen, esteemed members of the press and fellow economists, right after the presentation of the May inflation report, Serbia was hit by unprecedented floods. The effect of these floods on economic activity and foreign trade is negative, while the effect on inflation is negligible. That is to say that the floods exerted no major effect on food prices in an environment of low demand and a significant fall in international prices of primary agricultural commodities since mid-May. Year-on-year inflation continued to move below the lower bound of the target tolerance band over the past 3 months, measuring 2.1% in July. Based on our central projection, year-on-year inflation will return within the target tolerance band of +- 1.5% in the fourth quarter and stay therein until the end of the projection horizon. Unlike prices, production was affected by the flooding, especially in the sectors of energy, mining and agriculture. The inability to restore damaged production capacities within a short period of time is one of the reasons for the downward revision of our GDP growth projections for 2014 and 2015. Another reason is the need for stronger fiscal consolidation than anticipated earlier. As a result, GDP is projected to contract by 0.5% in 2014 and to stagnate in 2015. In the period under review, the international environment was marked by the continuing geopolitical tensions. Potential tightening of these tensions, notably those relating to the crisis in Ukraine, could generate multiple negative effects at both global and local level. At global level, the intensification of geopolitical tensions could affect prices in international commodity markets and capital and energy flows, while the potential negative effects on the domestic economy range from reduced export opportunities to a rise in the country risk premium and a decrease in capital inflows. The euro area recovery proceeded in the second quarter, and the bloc's growth prospect for this and the next year have been slightly revised. Hence, the euro area economy is expected to grow 1.1% in 2014 and 1.6% in 2015. But the risk of further escalation of tensions in Ukraine continues to overshadow the net economic recovery of the euro area. Another hovering risk is the risk of deflation, which prompted the ECB to increase the degree of its monetary accommodation in June by introducing inter alia, for the first time ever, a negative interest rate on deposit facilities. The ECB officials reiterated their readiness to use unconventional tools in the coming period should the circumstances warrant so. By contrast to the European Central Bank, the Fed decided in its June and July meetings to proceed with the tapering of its quantitative easing program. It is also expected that the Fed will raise its interest rate sometime next year. The dinar was under appreciation pressures for most of the second quarter as a result of the falling country risk premium and increased non-resident investment in government securities. In addition to global factors, the fall in the country risk premium was aided by the announcement of additional fiscal consolidation measures. Thus, in the first 10 days of June, EMBI for Serbia fell to 220 basis points, a level last recorded in November 2007. In July, however, depreciation pressures emerged on the back of mounting geopolitical tensions, but also unfavorable news regarding the pace and scope of fiscal consolidation in the period ahead. To ease excessive short-term volatility of the exchange rate, the National Bank of Serbia intervened in the interbank foreign exchange market, both on the sale and purchase side. It purchased 170 million euros in the second quarter and net sold 30 million euros in July. Based on our estimates, GDP contracted in the second quarter by 1.1% seasonally adjusted in the aftermath of recent flooding. On the expenditure side, a negative contribution is expected from net exports, given that energy imports increased and exports of manufacturing industry declined. As noted already, GDP growth projections for 2014 and 2015 have been revised down relative to the May inflation report due to the flooding effect and the announced sharper fiscal consolidation than anticipated earlier. GDP will fall by 0.5% in 2014 amid a downturn in agricultural production and stunted activity in the sectors of mining and energy. The contribution of construction industry, on the other hand, should be positive, owing to the reconstruction of destroyed and damaged facilities. We expect that positive impulses to the economy will also come from the recently launched program of subsidized lending to the corporate sector. On the expenditure side, the contribution of net exports to GDP will remain positive this year, albeit smaller than previously estimated, because of the expected higher imports of energy, construction materials and equipment on the one hand, and lower exports of manufacturing industry on the other. At the same time, the efforts to restore flood damage should have a positive impact on investments. As stated in the previous projection, due to the expected fiscal consolidation measures, the contribution of household and government consumption to GDP will remain negative both this and the next year. However, as additional fiscal consolidation measures have been announced, their negative contribution to GDP growth in 2015 will be higher than anticipated in the previous projection and will neutralize the expected positive contribution of net exports and investment. Growth in net exports next year is likely to be bolstered by further recovery in the euro area, whereas a rise in investments will be propped up by the flood damage restoration efforts and Serbia's further progress in the European integration process. The methodology of balance of payment statistics has been changed since the May inflation report. As a consequence, the current account deficit was revised up, as well as foreign direct investments in the previous period. In 2013, the current account deficit reached 5% according to the earlier and 6.5% of GDP according to the new methodology. However, though floods adversely affected the foreign trade balance, we expect that external imbalances will continue to narrow this year again. We estimate that the current account deficit in 2014, under the new methodology, will equal 5.9% of GDP. Further growth in exports is likely to be led by external demand, that is, the recovery of our main foreign trade partners, while a decline in domestic demand in an environment of fiscal consolidation is likely to slow down the growth in imports. Inflation pressures stayed low in the second quarter. Consumer price growth of 0.8% was due primarily to the seasonal hike in prices of unprocessed food and travel arrangements. Persistently low inflationary pressures in the last and this year were supported by diminished cost-push pressures, notably in food production, stunted domestic demand, falling inflation expectations, and relative stability of the exchange rate. The fact that disinflationary pressures are of more durable character is indicated also by low core inflation, which has moved within the target tolerance band since October last year, reaching 2.6% year-on-year in July. For the sake of reminder, core inflation is the measure of change in consumer prices, excluding prices of food, energy, cigarettes and alcohol. It represents the inflation component which is under the strongest impact of monetary policy measures. According to our estimates, year-on-year inflation will move below the lower bound of the target tolerance band in the third quarter. In the fourth quarter, it is likely to return within the target tolerance band and remain therein until the end of the projection horizon. The movement of inflation below the lower bound of the target tolerance band as of March was due primarily to a higher than expected fall in unprocessed food prices. However, we estimate that the disinflationary impact of food prices will grow increasingly weaker, leading to inflation's return within the target tolerance band by the close of this year. Namely, owing to the low last year's base, fruit and vegetable prices are likely to rise more sharply in the remainder of the year compared to other components of the consumer price index. However, the effect on inflation on these grounds will mitigate the fall in prices of primary agricultural commodities recorded over the last 3 months. Furthermore, in the medium run, the main disinflationary factor remains low aggregate demand, whose effect will be amplified by additional fiscal adjustment measures. Risks to the inflation projection relate to developments in the international environment, the fiscal situation in the country, and to a lesser extent to the performance of this year's agricultural season. Moreover, the projection assumes that electricity prices will increase by 15% in the fourth quarter. However, as the increase has not been confirmed yet, and in the case it does not materialize, inflation would be lower by around 0.8 percentage points by the year's end, relative to the central projection. Guided by the analysis of current and expected macroeconomic developments, the Executive Board of the National Bank of Serbia voted at its last meeting to keep the key policy rate unchanged. Monetary policy easing will depend primarily on the Executive Board's assessment of the potential inflationary impact of events on the international scene, as well as on the pace and intensity of fiscal consolidation. As we all know, developments in the international environment are beyond our control. However, we can influence the narrowing of internal imbalances. The consolidated budget deficit will be high this year again, burdened by additional expenditure for flood damage recovery. However, to ensure the sustainability of public finance, the application of additional fiscal adjustment measures should start without further delay. It is important that such measures be propped up by the far-reaching structural reforms. We believe that the first steps in this regard have already been made with the reform laws adopted so far. Furthermore, the credibility of economic policy would be underpinned by the conclusion of an arrangement with the International Monetary Fund. Successful implementation of fiscal consolidation measures and structural reforms would bolster the domestic economic fundamentals and create room for faster and more sustainable economic development, while at the same time increasing the resilience of our economy to external shocks. Thank you for your attention. I hope I did not go into too much detail with this exposé. These are the main ideas we wanted to highlight regarding the inflation report. Now I give the floor to you, and please, if you have any questions, feel free to do so. My colleagues and I will do our best to answer them. And please introduce yourselves.
From Radio Belgrade, at the very beginning, I would like to ask you whether you have revised the projection of investments for 2014. You are referring to FDIs, to foreign direct investments? Yes. Since early year, according to preliminary data in the first 7 months, the net inflow of FDIs has been around 700 million euros. These investments have been directed into trade and construction industries. Our current, that is manufacturing, our current projection equals 1.2 billion euros, so we expect the inflow of FDIs of 1.2 billion euros. This is consistent with 1 billion euros announced in the previous inflation report. There was, in the meantime, a change in the methodology. We are now applying a new methodology, so this is the answer to your question. Gordana Filipovic, Bloomberg. When will you write a letter to the government to explain why you have been moving below the target for the last 6 months, and what will be the explanation why inflation is below the target? Because inflation was supposed to be 5% and the average exchange rate of 118.8 dinars for €1. Those were projections by the government. And do you believe that these projections should be adjusted with the situation in the market, or the National Bank of Serbia will adjust itself to the expectations of the government, and why the governor did not come, or any vice governor today? And the third question, when the National Bank of Serbia intervenes in the FX market, it is much more tolerant compared to the flexibility of the dinar. So what has changed over the last 1.5 months? Thank you. So first, as regards the deviation of inflation and a letter to the government explaining the reasons why inflation moved away from the target and explaining the measures to be taken. In this regard, we believe this will take place in September because in September inflation will be moving away from the target tolerance band that is below the target for 6 consecutive months, that is below 2.5% per year. Reasons have already been mentioned today. The key reason is that we have had unexpectedly low prices of unprocessed food, which practically means that the deviation of inflation is temporary, and this should be the key argument and because this points to future measures to be taken. In the coming period, we shouldn't be taking any special measures, which should be directed at returning inflation within the target tolerance band, that is towards the target. So essentially, the key lies in lower food prices, and inflation will, with the lowering of the disinflationary effect of food prices, inflation will return until the year end within the target tolerance band. It will go up towards the target, which equals in the medium run 4%. And as regards the absence of members of the executive board, we are now having holidays, annual leaves, and the National Bank of Serbia has many more obligations, and the governor appeared in the media yesterday and over the previous days, and many things regarding the operation of the central bank have been adequately covered by the media. And if you believe that there are any other questions regarding the absence of the governor, I'm sure that the management will be here at the next presentation of the inflation report. And Mr. Zoroya is from the Monetary Operations Department, and he's in charge of interventions. So when it comes to interventions in the FX market, as it has been so far, the central bank intervenes to ease excessive volatility, and we always assess the character of pressures in the FX market. And we have had mild depreciation pressures. So far we have sold 20 million euros in the FX market, but the currencies of the region have weakened: the Romanian lei, the Polish zloty, and even the Czech koruna, which is considered a safer currency. And the risk premia have increased as well, and this is the result of increased uncertainties in the international FX market. Besides international reasons, are there any local reasons behind the weakening of our currency? So in July, the dinar weakened under the impact of international factors as well as reasons present at home. In terms of uncertainties as to the strength and dynamics of fiscal consolidation, and I believe that these reasons still apply. So basically what we can say regarding the FX market is that given the balance of payments developments in the medium run, Serbia has improved its external imbalances significantly, and we can derive from this segment the effects directed at the stabilization of the domestic currency. Of course, there are always things that lead to short-term volatility, for example, changes in the government and so on, and all this impacted on short-term oscillations, and our perception that the current pressure stems from short-term sources, whereas medium-term effects will be of stabilizing nature. We also have to bear in mind the European integration process, and all this affects the risk premium of the country.
Are there any further questions? So if there are no further questions, I would like to conclude that what the National Bank of Serbia is trying to indicate is that we are heading towards a period where fiscal consolidation measures will be implemented. In addition to these fiscal consolidation measures, which are absolutely necessary, in parallel we will have structural adjustment measures that should ensure that even in an environment of reduced income, household income, we would have to ensure an increase in economic activity. In order to ensure this, we need to provide stimulating business environment, attractive business environment, which will ensure that Serbia is on the path of sustainable growth in the coming period, and this growth should be led and motivated by external demand. It should be actually incorporated into into international foreign trade flow, into international flows. At the same time, this would make Serbia more successful in implementing its overall economic policy, and this would also contribute to the effectiveness of monetary policy, as monetary policy would be less sensitive, the economy would be less sensitive to external shocks. Please end your sentence. I just wanted to pose another question. Which one of the fiscal consolidation measures announced is essential? Everything relates to the pace and intensity of fiscal consolidation. All measures are urgent. They need to be implemented without delay. We are in a situation where we have to respond promptly, primarily in regard to ensuring fiscal balance in the medium term. Of course, the very lowering of income is not a solution in itself, because if it's spilled over into lower economic growth, this would lead to further unfavorable macroeconomic indicators in terms of their relation to GDP. And therefore, it is essential that this second segment, which is often forgotten, and these are structural reforms and their implementation, this segment should be put into the forefront, because this is an obstacle to reducing economic activity. These structural measures should provide for a more attractive business environment. We have to work towards increasing investments in both the size of investments, and we have to ensure their greater efficiency and their more adequate allocation. The effect of investments must be significantly higher, and it would be significantly higher under more favorable circumstances and in a better business environment. This is something that would guarantee higher economic growth in the medium term to us, an economic growth that would ensure a higher standard of living for our citizens, which is the key priority of this government and of the National Bank of Serbia as one of the elements and one of the economic policy creators.
I apologize. I would like to ask another more question. You are referring to fiscal consolidation measures and to ensure an increase in economic activity in an environment of lower wages. So wages were reduced last year, and even without floods, we would have a negative GDP or even stagnation in GDP. So why was this not possible this year, excluding floods, and how will it be possible with further cuts in wages? We would just like to understand how this can be materialized. It's very simple. Concurrently with reducing consumption, you have to ensure the conditions for investment growth. And one of our key assumptions is that we need to increase investments in the coming period. To achieve this, we need to implement structural reforms which will open the room for investors to invest in the coming period. If this possibility is greater, we will have a better possibility to answer, to meet the growth in external demand in the coming period, according to the prevailing viewpoint. There will be an increase in external demand, and Serbia has to respond with a higher supply. To have that, Serbia needs to have investments, and when wages are cut, we will ensure the improvement in internal imbalances. This is also a prerequisite for internal equilibrium, and this should contribute to the appearance of foreign investors in the country. Together with institutional and structural reforms, we will have an environment which will be competitive, and Serbia would be able to have economic growth through an increase in employment, and in this way through an increase in income. I believe, I hope I managed to answer the question. So as for 2015, when restructuring should be implemented, when numerous companies should be sold or closed, how do you expect growth next year? Do you expect stagnation? Okay, so you expect stagnation, but what is this stagnation like, and what is the level of investments necessary to ensure growth next year? You're referring to fixed investments. I'm referring to investments that are necessary to ensure growth. So next year we will have zero growth. We expect stagnation for a very simple reason. We understand that fiscal consolidation, or better to say structural reforms, cannot attract major investments in the short run. So this should be done first in terms of fiscal consolidation, and in terms of ensuring macroeconomic stability as well, together with structural reforms which you mentioned in regard to companies undergoing restructuring. This is only one segment of the story. There are other components as well where we need to implement important market changes, and this will ensure a more robust capital inflow, and based on this we will be able to expect in the coming years, as of 2016, 2017, we will be able to expect an increase in economic growth and a positive contribution to the standard of living of households, and an increase in employment at the same time. I believe I was clear enough. Do you have any further questions? I would like to thank you, and I would like to invite you to come again within 3 months' time to be present at the next presentation, at the presentation of the November inflation report. Thank you very much for your attention.